I've got Judd and I both were talking while people are coming in. Judd and I both have got a million questions about, well, I know I do, just about tomorrow and what to expect, how that's going to affect the bond market, the coronavirus, the effect that the SARS virus had on the equities in when was that, 03, and what this coronavirus can do. One of the brush fires.
So I have there's actually a conference this morning. I didn't tune into it. That the Chicago Public Health gave on the coronavirus. And my brother, because I consulted with my brother, who's a very prominent infectious disease doctor in Chicago, and we talked about it. And he's at this point not as concerned as others, because he thinks in the world of genome and genetics that the ability to create and produce vaccines is much quicker than it was even with SARS in 2003. But he said a lot of the data shows that this is mimicking the SARS and MERS virus, and even the Chinese were out this morning saying it doesn't seem to be as dramatic. Now, of course, it's in their economic interest, and if Mike's on here, he'll tell you, because this is the biggest travel week or 2 weeks in the year as they celebrate the Lunar New Year in China, and people are on the move in great numbers. So it's a very bad time. Also, by the way, I'm only going to go to 1 o'clock, so another 20 minutes, because I'm on the bounce here.
Okay, so here, the one thing, Carrie Lamb was on, and I don't believe anything that she said. So you got to take that with a grain of salt. And then the thing I really want to get to, besides your comments on that, is what's going on with the European debt market, because the Italians sold off last night with
right, the news about Matteo,
and now they're putting an ORH stay in. They stopped at a perfect level, and now they look like they want to blast off into tomorrow's ECB meeting.
It's a very good question, and I think that what some of the people are portending to at this moment in time is that Christine Lagarde is going to push on this unified bond of some sort. I mean, the more I read, the more it just seems to be going on. Hold on a minute. Let me go sit outside. My wife does not have to listen to that. Go out that one? No. Oh, okay. Hold on 1 second. I'm going to go out the front door. They are doing everything that we discussed. And there are people who are getting ahead of this. So that's why can you hear me, Judd?
Yeah, I can hear you.
Okay. So there were people talking about it this morning when I was listening to the idiots out of Davos. God, you know my battle cry is and will be pepper spray Davos and make them cry like they make the rest of the world cry with their nonsense. But with that in mind, there is really heavy talk. When I say heavy, that's coming from certain sources that they know they have to come up with a European unified bond. So last night, I would have been a seller of the Italian if I did anything, but I was in the mindset that I just wanted to see what was going on. And the reaction that, and Judd points out, is the reversal that he had here is really kind of interesting, because a 5-star looks, there's an election on Sunday, and that's why supposedly he resigned. De Mayo. How do I pronounce that, Matt? Matteo, okay. Yeah, who he resigned from his post in the 5-star because it looks like 5-star is going to get their proverbial butts kicked this weekend in Sunday's election. And if that's the case, it really plays into Salvini's hands and blows them up. So I figured that'd be bad for the Italian, of course, as Judd initial comment had it right on, but it proved certainly not so. As we saw, the initial was right, but people are chasing yield. And if you think that there's going to be a unified bond, that's why you haven't heard me talk about the European bond markets, because usually I'd be, buying the German and selling everything else on any type of real compression. But I've been watching it and not doing a thing. I've seen the German French has got into 24 differential. I think the low I saw over the last 5 years was 15 basis points differential, and it was a pretty dramatic move because it dropped from 40 differential to 24. And that's at the sense all with Lagarde, that because she's going to try to pull this off. And they know the only salvation, if the euro is to be salvaged as a viable alternative to the dollar, you must come up with fiscal harmonization. And fiscal harmonization, by its very nature, means that there has to be a unified debt instrument. Not a Bund, not a note, not a BTB, not a Bono, not a Greek bond. It all has to be rolled into a European debt, just like Alexander Hamilton, as I've said many times, did with the U.S. in the 1790s. The Europeans got out in front of themselves because they were in such a hurry to keep the Germans viably in a unified Europe, that they were doing anything to placate them. And by the way, Bernard Connolly has a new book coming out. And by the way, I've been on the website and I've told people I will get these books out to anybody who wants one. Just go. I don't have them available. I have to have them shipped from Chicago, unfortunately. I'm down here in Florida, so I won't mail them out for another week or two, probably 2 weeks. And I'll mail them to everybody who wants them. And I see there are a lot of orders on there. I just happened to go there, and I apologize to everybody. But I will get these books out, and you should read it. Bernard has a new book coming out. I haven't talked to Bernard in probably a year and a half, maybe a little longer. And I knew he was working on something, but somebody had written about that. I think I sent you the article, Judd, about somebody who had written it up. But that is the key here. And if that's the case, these yields will compress. Now, that doesn't mean we're not going to get volatility where they're going to go in and out, in and out, in and out on the differential. But the differentials keep making lower lows on the difference and lower highs. So somebody is really trying to put this together and try to front run it. Maybe some insurance companies and maybe some pension funds. Somebody wrote a really good piece. I mean, it was nothing new for anybody who's been in our discussions. Peter Bookfire this morning wrote a piece. He goes, "Who in their right mind would be buying any of this stuff?" And he makes the case that we well know. A lot of that falls into the shoulders of passive investing, which is why I think that people are going to get hammered eventually in passive investing, because you buy these passive bond funds, these ETFs. Well, they're loaded. If you're buying a European bond one, yeah, you know what? Last year they appreciated because the yields dropped so dramatically. But I don't hear anybody talking about how they're doing this year, as German yields have gone from negative 65 on the Bund. Last week they were down under negative 20. The French is back into negative territory, but it went from, negative 45 down to, or negative, negative 45, negative 40 anyway, down to plus 10 basis points. So somebody is sitting on some massive losses, whoever bought late, and we're not hearing those stories. But those are all buried away in passive funds. Bookfire's piece is really good. If you can go find it, if you can't, let me know. I share Peter's stuff, but Peter and I share a lot of conversations, so he knows that I do cite his stuff, and I know he doesn't have a problem with it. We talk about it all the time. So that's very important. But Judd, that's a really good eyeball catch with what went on there today. So, and I think that's why it is. Nothing more. It's not that, because Salvini, if he were to regain control of the government, would act to his actions would make people nervous that the Italians, could possibly pull it'll exit, but that's false. What they'll do is they'll position themselves for to get a lot of benefits out of the EU, because they know the EU can't let the Italians. You let the Italians go, wow, you know, that would create a massive problem in the global debt markets. I'll say it again, a massive problem, because the losses on anybody holding a lot of the southern European debt would come under massive hits. So that's not going to happen. He knows it, but it still shakes the market at times. But that's a really good catch, and the technicals, I think, really represent the fact that, hey, we're going to see a unified bond. Will it come faster? I don't know. Well, maybe we'll hear something from Lagarde tomorrow that's part of their review. You know, and that would send alarms off, you know, all over the place in Europe. If she said, you know, because they're doing 2020 as the year of the ECB review of monetary policy, and if she starts talking about a unified debt instrument, look for those yields to compress further and further.
Beauty. Gary says Mazel Tov, best to Izzy.
Thank you. Thank you. Yeah, it's great. As I said, somebody said, how many are, McLennan asked me, he says, how many grandkids do you have? I said, well, Toby has 2, Lizzie has 2, 2 plus 2 equals 5. I got 5. So he was laughing. So
I was up all night too. I was watching the CEO of Cargill talk about the trade deal. Awesome. I don't know if you caught that or not.
No, I didn't. But
he basically said that there's nothing there, that all the rail cars are sitting on sidings. There are no shipments. There are no orders.
But we do know that wheat is pushing higher and higher. You know, we almost hit $6 for Board of Trade wheat this morning. So these are, you know, those are not. Something is definitely going on in the global grain markets. It might be Australia, but some, you know, and that's my point. It was interesting. The Bank of Canada, we may as well get to that. So the European Central Bank, I don't believe will do anything tomorrow. It would kind of be nice if Lagarde would roll back something, but she's not of that. I don't think, from everything I've read, although she's been quiet lately, I don't think she would do anything. Davos is going on. But listen to the language about a unified bond. As long as, Judd, you're seeing that in the Italian, that's the language we have to look for. And then we'll have a better sense. And that may lead to a Euro rally. So be attentive. And again, it's the press conference and not really the Chicago time, 6:45. I hope I'm up and alert. I better remember that. Now, today, as expected, the Bank of Canada did nothing. Now, the statement itself was a little bit dovish. In the market, you see reacts, but I think today the Canadian is really responding more to the 3% drop in oil prices. At one time, I think it's come back a little bit. But because the statement said nothing. And the fact that they did nothing, which, of course, they did nothing because they have the latitude to do nothing. And they have, again, no QE. The Bank of Canada has never gotten involved in quantitative easing. They don't need an exit strategy. It's one of the things that makes me bullish, as well as I am bullish on the commodity markets, but today's oil price. So let's see if for the week, I'm looking at that 131.20 to 30 in spot dollar Canada, which probably equates to what, 76.25 in the futures, 25. So if they close over that, I'm going to reestablish a long Canadian dollar position. I had actually gotten out good this morning. I bought them back a little bit early, but I'm watching them to see if this holds in here. Because
again, to get over the 131.68 fibs, Ira.
I'm sorry.
131.68 fibs on the weekly.
Oh, and, okay. Is that what? Yeah.
And 131.56 is the 50-day. So you're right in the zone there. You just got to let it play out. Yeah.
I'm very patient with it. You know what? Because evidently, see, there's a big argument that they think that, you know, Canadian, that there are some people who believe that Canada is in a massive bubble. But, you know, I keep looking at that because, yeah, their interest rates have been low and their housing market has been way too strong, especially if you go, to Toronto and Vancouver, because Vancouver has had so much Chinese money show up. So interest, I just want to see, because I am bullish on commodities, and I'm seeing wheat prices, go off the indexes are holding in interesting areas, but they're trapped in these two areas. Both the CRB looks better than the Bloomberg, but so it is interesting, but you see how much movement you got. But I read the statement, a little bit soft, but again, when the U.S. is soft, they cut rates. When everybody else is soft, they cut rates. Canada did nothing. So of all the majors at 175 on their overnight lending rate, they're the highest right now. They're higher than the U.S. is 150 to 175. ECB is negative. Swiss is negative. The UK, that'll be interesting. There's no reason for them to cut. But Mark Carney has done such a bad job. I have a very low regard for Mark Carney. Next week will be the Bank of England meeting, and we see, and England had some positive data. And look at the movement in sterling. So we've had really good buying opportunities down there, and it's held that 129.80 to 130.20 area, which was important. The crosses look okay, and again,
look at,
ECB
look at Canada Swiss before you do your
yeah, I know. It's terrible. It's terrible. It's what's keeping me off of it.
You could have a double bottom there, so that's why I was looking at it from last month.
Yeah, the Swiss has really performed well. And actually the Swiss weakened today, and with the Mayo's comments leaving 5-star, I would have thought that the Swiss would have gotten a bid. And the Swiss actually did try to get a bid on it last night. It didn't last long. But it's another area. We're right to stay off the short Swiss. Everybody's blaming it on Mnuchin's comments, and from the Treasury last week, putting the Swiss on the list. Really? You're just putting the Swiss on the list for currency manipulation? Where have you been? Am I the only one who reads this stuff, who reads their releases, and it's all about the currency? So I shake my head. I just shake my head. They've been doing this really since they put the peg was a currency manipulation, and certainly since 2015, they've been, every statement they make is adamant about the valuation of the Swiss currency. But so be it.
And Euro looks like it could be a one-day wonder. So if you look at that thing, you gotta just.
Well, be patient. Be patient.
Oh yeah.
But and the metals are the metals. Palladium is whoever's running the Palladium corner. Well, you got to marvel at them. I mean, look at the Palladium has a $140 range today. Just when you want to see what happens when things go into hyper speed and hyper rally, you see what the Palladium. When we talked about it really kind of in depth with the Platinum, 2 weeks ago? I think the Palladium was what, 1700. We're up to 2340 today, 2350. It's amazing.
About it down in here. Almost the beginning of the month.
Yeah, and the Platinum is lagged here, but it holds in that 990 to 990, which it's done for 2 days now and last week. So worth keeping your eye on. They're usually substitutes and complements, which in economic terms means that you can substitute one for the other. And this is the interesting thing is the auto industry isn't really very robust on it, even on a global basis right now. So. Interesting. Who's ever running that is doing that. I'm surprised the CFTC has been quiet about it because it is very volatile and it just keeps pushing. Well, kind of looks like the S&Ps as far as I'm concerned, but what do I know? And that really, I think we, in a very short thing, but we covered a lot. Maybe, tomorrow I could probably get back on after the ECB because I have to go sit and get the Jeep, my daughter's Jeep, taken care of.
I'll be around in the morning. I have an afternoon.
Okay, so all right. Well, I'll let you guys know. again, it's better if people compile questions because there's going to be a whole lot of stuff going on. I mean, this is just warming up. Now, Judd, the high in the let's end on this on that bond S&P. I think the intraday high when we went back to October 3rd, 2018 was 21.18. I think that's what my data shows.
I'll look at the all session right now. I'm throwing it up.
Yeah. I don't think we made an all-time high. I think we got
close. We didn't make a higher high. Hang on a second.
Okay. Yeah.
Just I got to change the spread bars to get the granularity. Yeah, the high this quarter is 21,103, and the old high was 21,183. So it didn't make a higher high yet, and it hasn't tagged the old high.
Yeah, that's the crucial number.
Yeah, so
that's the crucial number. So we have to look at that, because again, if we get up here not to make a new high, wow.
Well, the Dow's doing the same thing, Ira. The Dow bond's doing the same thing.
Okay.
It's coming right up there.
Yep. Well, I mean, listen, I'm a big believer in that work because it showed itself for 18 years or 17 years, and it really was, it caught a lot of moves in that period, and I look for that again. But let's see what happens. This market wants, as Judd, you've written every day for a year and a half. You sell it at your own risk. It's really hasn't had anything of substance. To everything, and this is look at when the SARS, everybody's putting up those charts how the markets reacted during the SARS and the MERS and Ebola. You can't get anything out of this market, and if you don't think that's because it's cost of money. And if nobody saw Scott Menard from Davos, watch Scott Menard. And you could tell how frustrated he is because he sees the world in the way that he sees the world. And Scott Menard's a bright guy. He's one of the few who I actually care to listen to. But his frustration at being wrong, just like David Rosenberg for quite a while now, even though they're both really good analysts, it's going to happen. That's why I remain a trader rather than just, in-depth positions that I'm going to hold on to come hell or high water. When things, size up, we go with them. But watch Scott Menard, who called the global stock market rallies just a Ponzi scheme. And to sit in Davos and say that, you got to applaud him because he's just bringing his frustration right to Newcastle.
They were all over Prince from Bridgewater today too.
Oh yeah,
Oh yeah, he said basically the same thing.
Yeah. Okay. All right. So thanks everybody, and hopefully I'll be able to check in tomorrow.
Okay. Thanks, Ira.
Okay.
Congratulations.
Okay. All right, guys. All right. Thanks. All right.